please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, a very good morning. You're watching Power Breakfast on CNBC TV18 in the Mumbai News Centre. With me is Mangalam Malu. I'm Ekta Batra. Hi, Mangalam.
Hi, good morning, Ekta. So let's get it straight to all the top stories that we're tracking at this point in time. A lot to reckon with on this Tuesday morning. US markets begin the truncated Thanksgiving week on a positive note as Wall Street bet tax cuts would keep the economic expansion going. Asia markets too rise in early trade amidst strong economic data.
The board already knows my optional choices to replace me.
So you've already given
them? Absolutely.
Mahindra Group Chairman Anand Mahindra says M&M has a robust succession plan in place. Tells CNBC TV18 that he has given the name of his successor to the board in a sealed envelope. That's an exclusive.
Niti Aayog, Amitabh can't discuss with me. You scrap it and leave it. Don't do it. Because that is not going to be possible in our country.
Transport Minister Nitin Gadkari contradicts Niti Aayog's proposal on battery swapping for electrical vehicles, says the move will not be viable. Motown concurs with the minister.
Quest Corp signs a pact with Tata Sons and Tata Capital to acquire 51% stake in Tata Business Support Services for 153 crores in cash. The deal is expected to be completed by 31st December.
And Bharat ETF 22 subscribed 4 times as the government raises issue size to 14,500 crores. With this, the government has raised 52,500 crores through divestment in the current fiscal so far. All right, first up, let's take a look at the Asian markets. They've opened fairly in the green as we speak, as a drop in the yen has boosted Japanese markets, which is a positive, of course, for the Japanese exporters. So if you take a look at the Japanese index, up almost 0.9%, big gains coming in for the electric major Midensha as well as Kawasaki as well, both of them gaining as we speak. Also, they got a strong handover from Wall Street as the traders put on hold concerns about the US tax reforms and European political issues that were set aside. So we're seeing some bit of green as well on the Korean index. The Straits as well as the Taiwanese indices should come up for you. All of them sitting with a mild bit of gains. At the start of the show now, it has given up. So a bit of red on the Kospi, but 0.5% gains on both the Straits as well as the Taiwanese indices. But if you take a look at the SGX Nifty, that doesn't show a big gain. In fact, it shows a flattish start as far as trade is concerned. Let's see how that trend pans out.
Okay, well, let's tell you what happened in the US markets. US President Donald Trump said he will designate North Korea as a state sponsor of terrorism, with additional sanctions to come against Kim Jong-un's regime and those who do business with it. Trump's pronouncement comes just after China's ambassador to the UK and former ambassador to North Korea said that he was cautiously optimistic that diplomatic efforts would prove successful in preventing North Korea's push for long-range missiles and nuclear weapon capabilities. During a White House briefing, Secretary of State Rex Tillerson said that the US still hopes for diplomacy but continues to turn up the pressure on North Korea's regime.
Today, the United States is designating North Korea as a state sponsor of terrorism. Should have happened a long time ago, should have happened years ago. In addition to threatening the world by nuclear devastation, North Korea has repeatedly supported acts of international terrorism, including assassinations on foreign soil.
It is very symbolic on the one hand because it just points out again what a rogue regime this is and how brutal this regime is and how little they care for the value of human life. So I think if in that in of itself, I think makes a strong statement of just the nature of this regime. And as I've said, the practical effects may be limited, but hopefully we're closing off a few loopholes with this.
Okay, well, that's on North Korea, but let's see what happened on Wall Street. US stocks rose as investors bet tax cuts would keep the economic expansion going. So the Dow Jones rose 72 odd points, S&P 500, Nasdaq gained 0.1% at close. Equities also got a boost from strong economic data as leading indicators rose 1.2% in the month of October.
And on that note, here is some opinion coming in from JP Morgan as well as Morgan Stanley on the road ahead for the US markets.
The economy at the end of the day is doing very, very well. And that translates very nicely into earnings. So, well, perhaps we do have a correction, perhaps we have a pause like last week. For us, if we look out the next year or 2 years, this is still a market that has a little bit of room to run here. If we're thinking about all of the positive economic data in the U.S. and around the world, this is still a great environment for equities going into 2018.
In December, they resumed that gradual pace that they had been on prior. That's the every other pace, hike at every other meeting. So December, 3 more times in 2018. We do have inflation inching up over that time. I think that's enough for them, given that growth is above potential. Unemployment rate is so low. We're so close to hitting a 3 handle there. And financial conditions are easy. That's going to keep faith alive that inflation will eventually reach their 2% goal. So we expect March, June, September, they just keep marching on in 2018.
Okay, well, Fed Reserve Chair Janet Yellen submitted her resignation letter yesterday as Jerome Powell prepares to succeed her next year as the central bank's top official. Yellen said that she will leave the Fed Reserve completely once her successor is sworn into office. She would have otherwise been eligible to stay on the Board of Governors until 2024. CNBC Steve Leisman reports on this story.
Fed Chair Janet Yellen ending something of a mystery as to whether or not she would continue to serve on the Fed board after a new person becomes chair. And she wrote a letter saying she would not. She's just saying she would resign when her successor, who is now Fed Chair nominee, Jerome Powell, Fed Governor, is sworn in. She said she will effectively resign her position on the Board of Governors. She holds a position that goes until 2024, so it was really her choice. She said she believes Powell will continue to work in a nonpartisan manner, and she also says that she believes she leaves with the employment with the economy near full employment and price stability. There was also a question as to whether or not she might stay on for a bit, but now she's saying she will resign when Powell takes office. Yeah.
All right, and in Europe, European equities closed higher as the weakness in the euro helped offset concerns surrounding the political instability in Germany. The French CAC as well as the German DAX, both of them ended with gains of almost 0.5%, while the FTSE 100 lagged behind, still closed up with a gain of about 0.1%. We saw similar gains come by in the peripheral indices as well, barring the ATHEX, which was down about 0.3%. But by and large, it was a day in the green despite political concerns. And talking about political concerns, German Chancellor Angela Merkel, she said that she would prefer new elections to leading a minority government after talks about forming a 3-way coalition collapsed overnight. The pro-business Free Democrats unexpectedly pulled out of more than 4 weeks of negotiations with Merkel's conservative bloc, and the ecologist Greens citing irreconcilable differences. The breakdown of the talks leaves Germany with 2 unprecedented options in the post-World War II era. One, Merkel forms a minority government or the president calls a new election if no government is formed.
The path towards a minority government for a stable country, for a country that has so many challenges to deal with, is one that would have to be thought about very, very carefully. One should never say never, but I would be very skeptical and think that new elections would be the better path. I want to say also, though, that the voters gave us a task, and we have never had such a situation, and that is why I took special note of the President's words today.
Okay, well, let's move across and see what's happening in asset classes. In the currency space, the dollar has touched its highest against a basket of major currencies in nearly a week as the euro has weakened on political risks linked to German Chancellor Angela Merkel's failure to form a 3-way coalition government. Traders await a speech by the Fed Reserve Chair Janet Yellen later today and the release on Wednesday of minutes from the Fed's November meeting for clues on the direction of the US monetary policy.
In the world of commodities, crude oil prices slipped as traders took a cautious approach ahead of an OPEC meeting next week, where an extension of current price supporting curbs on crude output are due to be discussed. The expectation for the agreement to be extended to cover the whole of next year.
And from precious metals, gold has slipped on Monday as the dollar has risen, but prices are still held near one-month highs hit last week as political and economic uncertainty in the United States dominated sentiment.
Back home on Dalal Street was a lackluster sort of equity session for the equity benchmarks after a near 600-point rally on the Sensex. In the previous two sessions, we saw a bit of a ho-hum sort of movement with a bit of a rally in the last hour. The broader markets, though, continued to rally. The Sensex ended up about 17 points, while the Nifty, too, was about 15 points. So the cues that we're stacked up with today indicate a flattish start as far as the SGX Nifty is concerned. But for everything else, we have Anisha who joins us now. Anisha, what are you gathering?
Well, as you said it, yesterday was a lackluster day of trade. It was mostly quiet. We were trading in a narrow range, mostly in red for most part of the day. But by the end of the day, the bulls were just had a bit of edge because the Nifty and Sensex managed to close just mildly in the green. The mid-caps, as you said, outperformed yesterday. Even if you look at the fund flow picture, the trend of FII selling seems to continue a bit because the FII sold around 360 crores in cash market, whereas we had a DI and net buy figure that really supported the market with a buy number of around 613 crores in the cash market. If you look at the global cues, you mentioned, yes, SGX Nifty is showing a mildly positive start. But if you look at the US markets after the weak close that we saw on Friday, yesterday was a good session given the Dow Jones, Nasdaq, S&P 500 all closed in the green. There were some leading indicators that came in at 1.2 versus an expectation of 0.6 that really filled the trade there. But the US talks on the tax reform is what continues to drive the investor sentiment as well. Late last evening, we also got comments from US President Donald Trump saying that US will designate North Korea a state sponsor of terrorism. So a bit of geopolitical tension is what you need to keep an eye out on. Europe is the place where all that geopolitical instability is what is driving the markets, because remember, in Germany, the coalition talks have kind of failed, and Merkel has now said that she would prefer new elections to leading a minority government. So that is a developing story that we'll keep an eye out on, but that was the driving factor for European markets as well. If you look at Asia, Nikkei was trading with steady gains. SGX Nifty, as you suggested, was indicating a flattish, mildly positive start. Energy prices will also remain in focus because remember, there's an OPEC meet coming up next week. Now, Iran's oil minister has said that the majority of OPEC members support extending output cuts beyond March. Now, that should support the prices, but that is something to keep an eye out on. In terms of the key levels to watch for our own markets, well, today there are no major indicators or domestic cues that are lined up, but 10,250 as per the experts is a major support zone, and on the upside 10,350 is what we should look at. Back to you.
Okay, and Anisha, stocks?
Well, yes, a lot of stocks that were making news yesterday from the broader markets today as well. It's going to be a lot of stock-specific action. So Quest Corp being top on the list. Now, the company has approved acquisition of 51% equity stake in Tata Business Support Services. Motilal Oswal came out with a note on it. They've raised the target price seen positively by the street. L&T Finance will be in focus today because there is a block deal that is expected to happen. The price range suggests is in between 180 to 188, so keep an eye out on that. Jet Airways held the analyst meet yesterday. Some of the takeaways include that the company is expecting the available seat kilometers growth of 8 to 10% versus the industry growth of around 15 to 20%. BCL will be another stock in focus as some marquee names like Purinju, etc. and other investors have bought stake in the company. Infibeam might be in focus because reports suggest that the company is keen to sell minority stakes to Fairfax Financial Holdings, so keep an eye out on that. Logistics stocks, they have been buzzing for a while, and now we understand that it has been given an infrastructure status, making lending and other issues easier for the companies, and that's why they should hold up in the green. ARSS Infrastructure, small order win for the company of around 87 odd crores. NBCC has awarded a 542 crore award to Simplex Infrastructure. The company has been bagging quite a few awards lately. Expect that one to hold in the green. South Indian Bank to issue Basel III tier bonds for an amount of around not exceeding 500 odd crores. And lastly, just a word on the results. Vidicon came out with results. Very weak set of numbers because the loss came at 885 crores versus a loss of 370 crore reported last year. So that one should hold up in the red. Back to you.
Government has set up an insolvency law committee to suggest further changes to the Insolvency and Bankruptcy Code. Remember, the government had notified the setting up of this committee last week itself. Sapna Das joins in with more details.
Well, changes are being considered to the bankruptcy law. There is going to be some further tightening as far as the IBC is concerned. This matter is under active consultation, as has already been indicated by the Economic Affairs Secretary Dr. Subhash Chandra Garg to us on Friday. But having said that, the message is going to be probably loud and clear that there cannot and there will not be 100% bar on the promoters from bidding for distressed assets. This prohibition is not going to be a blanket prohibition. Basically, what they will try and do is that make sure that the promoters don't misuse the IBC. Whenever and as and how, in case their bids are accepted for the distressed assets. Because the problem here is it's a catch-22 for the government. In case you completely bar the promoters from bidding for the distressed assets, then the problem that may arise is in terms of beating down the price of the asset and the bid price is actually coming down, because the fresh parties will, may look at the whole situation very differently. And it may also involve a larger haircut for the banks. But as I said earlier, it's a moral hazard. It's a catch-22 for the government. So definitely they'll tighten the bankruptcy law further. It's under active consideration, but may not put 100% bar on the promoters, and it may be possible that the amendments which are being thought about to the IBC may also come through an ordinance format in case the government is in such a rush.
All right, fair point there. In fact, we also caught up with the chairman of the Insolvency and Bankruptcy Board of India, M.S. Sahu. Here are what he had to say about these concerns regarding the Insolvency and the Bankruptcy Code.
There was a doubt whether if the resolution plan entailed takeover of an enterprise, would it require a public offer under the SEBI takeover code? Whether the shares to be allotted as a part of a resolution plan would require to be made at the preferential pricing norms. So those have already been exempted by SEBI. So whenever we come across this kind of difficulties, we engage with the stakeholders as well as the authorities responsible, try to facilitate the transaction without affecting the interests of other stakeholders. The objective is not to penalize every promoter just because he happened to be promoter before the resolution process started. Objective is that the committee of financial creditors, who are quite sophisticated business persons, they would be able to see through if detailed information are made available to them as to the credibility of the resolution applicant.
Okay, well, moving on then, the battery swapping policy as proposed by the Niti Aayog to promote electric vehicles is not viable in India. That's the word coming in from the Road and Transport Minister Nitin Gadkari. Remember, the Niti Aayog in a report had suggested the introduction of standardized swappable batteries for electric vehicles, but Nitin Gadkari has asked Niti Aayog CEO Amitabh Kant to scrap this idea.
Niti Aayog also, the battery, that swapping policy, I feel it is not appropriate for the country, because it is a very difficult thing. Some of the intellectual and talented people, they want to convince it to government. When Niti Aayog, Amitabh Kant discuss with me, you scrap it and leave it. Don't do it, because that is not going to be possible in our country.
All right, in fact, Motown too concurs with the Minister Gadkari on this battery swapping proposal. We spoke with the SIAM President Abhay Firodia yesterday. Listen to what he had to say.
The idea of battery swapping has worked in certain areas of the world, but it would appear that it's premature to try and implement it across the board, across all kinds of vehicles in India. It may work for very small two-wheelers and small three-wheelers with low performance requirement. It may work for buses which are run within a very small confine, let's say within the city. But swappable batteries on cars and performance bikes are not easy to implement. The automobile industry, under the aegis of CM, is putting together a white paper in this regard, which will, within the next few days, be submitted to the government. The automobile industry does not unanimously say battery swapping is needed or not needed. And it certainly says that electric vehicles are the way to the future, and conditions need to be created whereby a unified policy can be created, which is subscribed to both by government and by the industry.